Hello traders, Gary Wagner here, 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, 3rd day of June 2020, and this is the daily report for gold and silver. We had a strong sell-off in the precious metals complex as a whole. This a direct result of a U.S. equities market gaining 2 points, for example, in the Dow, and that had the undertones of an ADP report that came out much better than expected in terms of jobs lost last month. The prediction was about 8 million. It came in at about 2.9, and it shows that there are individuals, massive amounts of individuals, returning back to work as states on a scattered basis reopen. We were stopped out of our trade. We will talk about that in detail when we pull up our technical studies. But first, to the price board. Traders, today's ADP report had a strong and severe detrimental effect on the precious metals, taking them sharply lower. We are looking at gold futures basis the most active August contract that is currently at $1703.10, down $30.98. And that's after hitting a low this morning of $16.90.30 and then recovering slightly. We were knocked out of our trade at $17.19, well above current pricing. We'll talk about that when we pull up our technical studies. Spot gold down $28.70. It is below $1,700 at $16.96.10. Platinum sustained a drawdown today of about $10, 1.2%, $858.30. Palladium lost about $27, 1.36%, and is still below 2,000 at $1955.60. And lastly, silver down 1.67%, below $18 at $17.95.5. And that's all within a weaker U.S. dollar, providing some tailwinds that were supportive of the precious metals. And the U.S. equities markets continue to be really on fire. They have been over the last couple of trading days, up 2%. This is the Dow Jones Industrial Average, 269.89 points after factoring in a 2% gain in the market today. Let's take a look at our technical studies. Traders, today's drawdown was severe, and it was definitely a strong move to the downside. It put gold in terms of the technical analysis at a very critical level. I draw to your attention this bottom support line in which we have simply fixed a series of lows, this low here and this low here, and extended that forward. As you can see, today's move definitely broke below that price point, but did manage to close effectively above it back within this particular area. Because I believe that if we see a break and a hard break below this particular price point, which is a key psychological as well as technical level, because what we have in terms of our psychological level, of course, is 1,700 per ounce. We can see that that has been a key and critical area for some time. The second thing that we need to be aware of is this 50-day moving average, which is slightly above current pricing. Therefore, if we do see gold pricing break below this key support level, which is comprised of two things: one, the 50-day moving average, and then secondly, the lower level support trend line that we've drawn in, then we could see gold prices trade as low as $16.59. That represents the 38.2% Fibonacci retracement. It could go as low as $15.80, although I highly doubt that. That would be the 61.8% Fibonacci retracement. And this retracement set is the standard one that we have been using. It begins at 1450 and it concludes at 1788. However, my sense from this most recent activity and lower pricing is that it will maintain itself in a sideways trading pattern and will maintain itself within this compression triangle, meaning we've hit our bottom here, we'll possibly trade to the top here, and if it continues to trade sideways, we'll then go back down. But at some point, it's going to reach the apex, either breaking above on a closing basis or below on a closing basis. And I am still of the belief, because when we look at the overall long-term trend, that has definitely been higher over this last 2 years. When we compress the chart, you can see that. I think the break will be to the upside, but we certainly are far from that right now. Right now, what we have to report is that we did take a loss on our trade today. We got in at 1740. We were stopped out at 1719. The actual loss on the trade was $21 per ounce, or $2,100 per COMEX contract. As I said, I believe most likely we will continue to track within the range of this compression triangle, but what is key right now is whether or not gold pricing can hold above the 50-day moving average, because as it stands right now, it's a couple of ticks below that. This has been Gary Wagner, wishing you, as always, good trading. I'm sorry I was unable to deliver that to you today. Have a great day. We will talk to you tomorrow for the next daily update and review. Bye-bye.